What's going on, guys? We are back for another banger meeting. If you're just joining us and we are recording, well, record. That's great. Pay attention. Listen. How do you get to be a part of these awesome chats that we are in? Description down below. Click that link tree. You can get a part of the Facebook group that we are in, the Discord that we are in, where we hold meetings every night at 9 and we do our call outs, our watch list. We post our profits. I mean, we do so much in here, and tonight we're going to do some studying. First and foremost, we're going to go run through the S&P 500 and where we sit, of course. Then after we do that, we'll go over the trades I got into, I got out of, and then we'll look at what I am looking for today. We're going to run through that quick because I want to make sure we do some studying on Kristjan Kullamägi, our founding forefather of our swing trading businesses. Okay, so we're going to run through it, but this is going to be an informal thing because this is the Discord meeting. We're just chill. But yeah, Jimmy, like we were saying, pumped to see that you got that NNE. Dan, Bob, Dan, I'm pumped to see you grab those two, and you're playing it beautifully. Looks like we got Swervo for president in the building. What's going on, Swervo? Yosef, what's up? Who else we got? B Stewie's in the house. Covey, it looks like I didn't think you could join us, Covey. I'm glad you made it in, brother.
I made it, brother.
Yeah, now you know it's a party, baby. Now you know it's a party. And it looks like we got somebody new in here, Michael M. You haven't been with us before. It's good to see you, brother. I'm glad.
No, I've talked to Michael.
Oh, have you? Oh, you know what?
Yeah.
I'm sorry. I have seen Michael in here. It's far and few in between. So, Michael, thank you for joining us tonight, man. Appreciate you being here, brother. All right. So, guys, this is what we're going to do. We're going to run through it. And like I said, I'm going to be quick. I'm going to be brief. And I'm going to be all up in your face with this meeting, guys, because I really want to study some Kristjan Kullamägi, because the more that I learn, the better off we are. For just to put it in perspective, honestly, the more that we learn from Kristjan Kullamägi, the better off we are. Okay, the S&P 500, guys, the S&P 500. As we put a vote in this morning, if you guys were there for the vote, we voted that we were going to bounce off this 10-day moving average and we were going to close above it. And we did. We closed above it. Now, who knows what tomorrow is going to bring us? But as I always say, as long as we're above a 10 and 21-day moving average, we are risk on. Michael M., if you could mute yourself, please, just so we get this recording nice and clean until you got something constructive to say. Appreciate you. This bounce off that 10-day moving average is looking really, really good, guys. And I keep telling you, I don't care what's going on in the world, what's being said. I'm still risk on with the 10 and 21-day moving average. And just as Covey brought up yesterday, we still need to be cautious here because we are in an area where we're not seeing a ton of setups. Now, I have seen some setups come into fruition today. We took a few of those setups today, and I hope we have continuation on the 10 and 21-day moving average as we rise to the north side. So we need to be cautious. Some of us are using half share size. I personally was using half share size today. As long as we stay above this 10-day moving average, I'm going to continue going back to full size as long as the market continues to show constructive criticism, as we'll call it. But if we start to break down below that 10-day moving average and we start to flatten out, like during Covey's meeting, we were starting to flatten out here, then I'm going to go back down to half share size, okay? That's just what I do. It's just it doesn't matter if that's what you want to do. That's just how I play it. I know Covey likes to play it that way too, especially when there's not a lot of breadth in the market. So that's something else that we need to talk about too, is the breadth, okay? We want to see that breadth lightening up, but it seems like every time tech decides to rip tater chip to the north side, well, the breadth starts to go away. So the S&P 500 sitting at 545.11. So it is looking absolutely beautiful right here. This pullback to the 10-day is very nice. It's very healthy for the market to do that. The sideways action for 3 days is very healthy for it to do that. Can we go lower? Absolutely. The 21-day moving average is my line in the sand. If we come back to the 21-day moving average, you'll probably see me go hard. I'm going to look for the best trend breaks and base breakout setups until we break the 21-day, and then I'm hands off. But usually, like we have seen multiple times, if we go back and look at this, anytime that we have came up to the 21-day moving average or tried to break down below it, it just rips up, breaks down, rips up, breaks down, rips up, breaks down, rips up, and I don't need to continue. I mean, this is what the whole 2023 bull run was, and then into 2024 as well, okay? So keep that in mind. So now we are still riding on that 10-day moving average. We're getting a lot of really good data coming in showing that there's economic contraction, that the sticky inflation is starting to come down, and we have some news coming up very, very soon with the economic calendar of it leading into that. So as long as it doesn't come out hot and we start to continue to show economic contraction, I still think we are to head to the north side. Okay. So that's the S&P 500. The QQQs, as you can see, we ripped right back up above that 10-day moving average, so still looking very constructive. As you guys know, NVIDIA was leading the charge on this, so NVDA ripped right back off of this. I actually ended up taking this trade, this big trend breakout. It looks a lot cleaner on the hourly. You can see a big hourly trend break. I did not take in the pre-market, but I wanted to see how the opening was. After the opening showed me a low in an area that I could risk off of, that's where I ended up taking half my share size. I did not risk full share size. I only took half my share size. We're up about $300 on this. It's really no big deal. I have not taken any shares out. And my reasoning before that, and I'm sure Covey will probably chastise me for this, but I didn't take half my share size out because I only am in half of my share size. So my risk, I've already brought up to break even. I don't care if I give back this $300. I want to just keep this 50 shares in for the longer term trade, maybe new all-time high of day, and then I'll take out half my shares. But we'll see. This one I'm playing a little different because I'm only in half my share size. Okay. So NVIDIA led the QQQs. Now the IWM pulled back and then traded sideways, guys. We didn't see anything. Now it's creating new higher lows down here, but we're still below all moving averages. So we need to be cautious with these small and mid caps, guys. That's not very cool. I don't like it. All right. Now, we always want to make sure we look at the breadth of the market. And the breadth of the market, the RSP, this is the equally weighted ETF of the S&P 500. Now, this is where I feel a little bit concerned. Now, if you guys really look at this, let me blow this up so we can see this better. So let me just explain, because I know a lot of you are seasoned vets. You've been in here with me for a long time, and you know why we look at the RSP. Now, I try to keep my my data, my outside analytics from coming in and trying to confuse everything. But if we look at the S&P 500, that's the overall broad term of the market. Okay, that's 500 stocks. The QQQ is limited to a group of tech stocks, and the IWM is limited to groups of small and mid cap stocks. Okay, where the RSP is equally weighted in the S&P 500, meaning if we look at this market watch, this is your S&P 500. If we look in the tech area, NVIDIA, Microsoft, and Apple are enormous, okay? Google and the communication service, enormous, right? Well, if we look, tech is most of the S&P 500, right? Well, if we look at the RSP, it's not. They are all equally weighted, meaning we want to know how the overall market's doing, not just the tech and communication industry, because we already know they're doing well. So how's the overall market doing? Meaning if tech and Google disappeared, how is the market doing, right? So when we take a look at this, we can see that we just pierced below that 50-day moving average. Now, good news is we are creating these new higher lows, guys. We're creating new higher lows here. And if you look at it on the construct of like a flag pattern, you can see here we are creating this flag type pattern, okay? So it's looking healthy, but guys, I still want to see this above these moving averages. I would still love to see it creating new higher highs, okay? So these new higher lows, we're still making new lower highs as well. So it's starting to get a little bit tighter. I want to see this thing break to the north side. When that's going to happen, I don't know. If it's going to happen, I don't know. If this thing decides to break to the sell side, that can be really dangerous. We don't want to head back down on the overall S&P 500, because then what happens if tech decides to fail, okay? So that's all I'm going to give you for the market. We are still risk on. The VIX volatility index came down, so it's good to look at that fear gauge and show you that there is not fear in the market right now. There is no fear. There's no, the Middle Eastern tensions have seemed to subside. I don't know anything about politics or anything, all that outside mumbo jumbo. All I know is according to the market, there is no fear, okay? Maybe there might be fear in the future. There might be things that we could talk about to make it sound scary and more interesting. But if we're looking at a market perception, there is no fear in the market currently. Zero fear. Okay, we're at like 1284. Okay, now that we went over the S&P 500 and all of its counterparts, we know that we are still risk on. Things are still looking extremely healthy. Yes, we can take in a lot of other internal factors and say, hey, there's a lot of bad things going on. But to keep it simple, stupid, KISS, we are still risk on. We're still above a rising 10 and 21 day moving average, and we are still looking for those proper base and trend breakout setups. Okay, so now we can move on. I am going to just show you quickly what I took today so you guys can understand a little bit how we trade. CAMT, I played this trend breakout. This could be argued if I played this good or not, okay? Now, this is hindsight. Keep that in mind. Now, I got in right here at the trend breakout. Why? Well, I seen this volume coming in here, and I consider that to be higher than average volume. So if we mark that volume and you look at this white line, I'll blow it up for you, and we look at this volume that came in, you can see it's much higher than its average volume traded down here, okay? I'll just show you a little bit better. So right here is that volume right here. And if you look at the white line across there, it's definitely much higher than your average volume. It wasn't anything that was too crazy. So I wasn't extremely convicted, but I wanted to take a little something here. So I ended up getting half of my share size in. And once I got up to, I believe it was, I think it's 1.5 R maybe. So we were at 1.7 on a 4.4% ADR. And I exited somewhere in here. So 1.4, almost 2 R here, guys. And I ended up taking out some of those shares, okay? I could probably look at my trades. Let me look at this really quick. Let me see here. CAMT sell at 113.75 and 115.66. So 115.66. Let's take a look. I'll mark out where it's at. I usually do 115.66. So right here is where I ended up taking those shares out of the market. So now if we measure that, and we can figure out exactly what it is, so I'm not bullshitting you guys. 166, yeah, a little over 1 R. I took out half of my shares, and then I moved my stop loss up from this low to break even. And as you can see, it came right down and broke me out for break even and came right back up. Now, a lot of times that would piss you off as a trader, right? Well, this has happened to me plenty of times. There's multiple things that we could do to kind of calibrate this, and we could say, hey, why don't you leave your stop at the low of the day when you took off your shares? Well, for this reason, the same reason why we had this meeting yesterday, we're being cautious. I wanted to lock in capital, and even though it was only $53, which is really chump change compared to what we actually made today, $53 adds up. I took that $53, it came right back down, it stopped me out for break even, and then it came back up. Now, if it wouldn't have came down and stopped me out for break even, let's say my stop was a little lower, I would have continued to make money, and we would still be in this trade. So I made some money on CAMT. It was a beautiful call out, and it's still a beautiful trade, and I still think this can head higher. But that's what happened with this trade. So instead of taking a loser, I took a small winner today, okay? So I'm not angry with CAMT. It's great that it's still working out, and congratulations to anybody else who took this with me who is still in the trade. I'm still in DYN. We had a huge pullback today. Now, why am I still in DYN? Well, it hasn't broke this 10-day moving average, okay? DYN, we're up another $133 on this last piece. Today, we're down $258. We've already locked in mucho grande profits on this thing at 4R. Okay, I took out half of my shares at 4R, so we're already locked in roughly around $300-400 on this trade. And now that it's pulled back, when it stops me out at break even, I'll probably take another $100 on this trade, but I'm still going to wait until it closes below that 10-day moving average because that's the best way I found to do this, okay? I took NVIDIA as well. If we look at NVIDIA on the hourly, NVIDIA on the hourly here, you can see this huge trend that came down that was very scary for a lot of people. We also, if we look at this on our beautiful, beautiful trading view, NVDA, which guys, if you don't already have it, you can look at this in our resources. I have it posted. You can click on that link if you guys want. It's absolutely free. You can download this amazing charting platform. And Covey, your boy Covey, has actually made a video to show you exactly how to set this up the way we have this set up right now, okay? Look at this anchored VWAP. This was its earnings from May 22nd, and we did an anchored VWAP off that in May. And look, it bounced right off of it the first time, and now it's bouncing off of it the second time. So because of the anchored VWAP, because of my trend break strategy, we actually broke up and I waited for the open to see how it take, and then boom, we took off. So we're up about $304 on that. And then I stopped out of NEE today, or I'm sorry, NNE today. We made about $1,000 today on this, and we made a total of, I posted it somewhere, a little over $3,000 on this trade. So we played this all the way at got in at like 745, 747. The call out was for 750. The volume came in. We let this thing ride out at 830. I took out half of my shares, and this thing just kept ripping up to the north side. Now, this is a black swan. This is one of those trades where it's absolutely beautiful, and you're absolutely happy to be in one of these things because it moved up over 400% when it made it up to 37. Covey took out around 25. He sold out this morning at 25. I sold out another 50 shares at 30.44 and then moved my stop loss to follow this trailing 1 hour. Okay, so because we've went parabolic, because we're up over 300%, I used the 1 hour trailing stop loss. Okay, 1 hour, 10-hour trailing stop loss. And that's a little bit different. That's a little bit different than what I normally do, guys. But I've also not been a part of a ton of these trades, okay? Usually, for the longest time, I wasn't playing these small caps. This thing really got to moving, and I'm really happy to be a part of something like this. These are going to be more on my watch list, and obviously your watch list too. So it was nice to do this. I'm glad to have Danny. Unfortunately, he sleeps while we're up studying because he's in a totally different time zone. But Danny corrected me today. We study Kristjan Kullamägi just like we are going to in just a few minutes here. And he pointed out to me that why am I using this 10-day moving average? And I said, because that's what Kristjan Kullamägi does. That's who I've studied for well over 3 years now, on top of, my years of trading. I've studied specifically Kristjan Kullamägi for over 3 years now. That's what he does. And he says, no, that's not what he does. Not after something moves up this high, this fast. He trails using a 9 or 10 EMA on the hourly, which took me aback. And then he backed it up with data and proof. So I changed today my rules in trading after something has gone up over 100%. Okay. So I'm going to add that into things here. And of course, it's not something that you're going to retain the first time because I sure as hell didn't, because I've watched Kristjan Kullamägi for years. But now that we're becoming a part of these black swans, we need to remember this for the next time that this happens. Okay. So before we carry on, before we start studying, I wanted to know if you guys have any questions, comments, or concerns about the market, the S&P 500, the VIX Volatility Index, or anything on my trades that we just went over. I know it can be a lot. It can be very confusing. But if you have anything, you need to ask it.
Hey, Dave, I got a question.
Go for it, big dog.
In the chat, is there a reason why you didn't go with the $27 stop? And because of the Chris Kullamägi, that's why you changed it to the hourly? Or because I ended up my stop up as well, and I used the $27 area.
Yeah, so I peeled off a piece because I felt like we were going parabolic. So I took 50. So I was holding 150 shares. Yes, in the beginning I had 300 shares, and so I took off half of my shares after like 4R at $8.61. Okay, then my next. So I was holding 150 shares, and I held those 150 shares for 11 days. At least that's what it said. 3, 6, 7, 8. 9, maybe it was closer to 11. I'd have to bring it up on my dashboard. Here, I'll just bring up my dashboard right here for you guys. This is my past 7 days. Okay, we're up in the past 7 days over $7,000. All right, I've had one loss, and that was NU for $180. All right. This here is NEE. Okay. I got in, the entry price is $7.30. And after we exited out, the exit price is showing $27.12. Okay. But I actually exited this trade out in multiple spots. So you can see I sold at 128. I'm sorry, average exit price, average exit price. That's the size. That's the time. That's position. That's the price. Okay, so I'm in at 7:30, in at 7:56, and then I sold at 8:41. Okay, it looks like I sold 150 shares at 8:41. Then I sold another 50 shares right here at $30.54. And then I sold all the rest of my shares at 27.12, 27.13-ish. Okay, that's the average price it gave it to me. So why did I do that? Well, because Kristjan Kullamägi does state that he uses, here's the hourly right here, I'll blow this up. He does state he uses the hourly trend break on the 10 hourly trend break. So this is the hourly, and I just added a 10-day moving average or a 10 hourly moving average, which means it takes the past 10 hours and it puts an average plot on the line. So when it broke this 10 hourly, I exited right here at 27.50. All right. Does that answer your question?
Yeah, thanks, man. I was just wondering about that. I still have my 25 shares. I'm holding.
Hell yeah. So you didn't exit the full position? I like that. I
No.
wanted to hold a little bit too, but I also wanted to make sure that my rules were defined. Because I changed my rules in the middle of a trading day, I didn't like that first and foremost, but I also didn't want to give back 200%. You know what I mean? So changing my rule set made me very uneasy because my whole focus now is to be disciplined, you know, and because I've been ultra disciplined the past 2 weeks, you can see, you know, making over $7,000 because I've been ultra disciplined. Why would I, you know, I need to start thinking more about my family and not my wants and needs to trade, because it's not about my wants and needs. It's about making money for myself, for my family, so I can be, to be wealthy, you know, just to simply be wealthy. I don't care about driving a Lambo. I care about, you know, making a new park in Monroe, Michigan for kids to play on and paying cash for it because I don't need this damn money. You know what I mean? So now we're on the right track. And so when I changed those in the middle of the day, it really made me feel uneasy. So I'll tell you this, I'm happy that you're still holding 25 shares, my dude, because now I can still root for you. You know what I mean? So congrats, dude. And congrats on this trade too, B. Stewie. I know a lot of you guys got into this. Jimmy, I know Jimmy played this. B. Stewie, you played it. It was unfortunate Dan Bob had to miss, but I really like the article that he wrote. And if you guys haven't joined our Facebook, Dan Bob, if you could post that in the open chat for me. If you guys click on this open chat in the water cooler, if you want to be a part of our Facebook, you guys are more than welcome to join it. He gave a really good article on why he missed it and why it's very important to keep a clear head when you're trading, because it, or at least keep a clear space while you're trading, you know.
I have a question for you, Dave.
Go for it.
What do you mean by parabolic, and why is that an issue?
Great question. Great question. So I'm gonna be very honest. I don't know as much. I know about parabolics. I know what I'm trying to say is I don't want to say the wrong thing when I start talking about parabolics, okay? So parabolic is something that moves so high, so fast. It's gone parabolic or straight up, okay? So if we look at this thing on the hourly, this looks parabolic. It's gone straight up. Now, my other example would be SMCI. I consider SMCI parabolic right, let me look at this on the hourly. Yeah, right here. So this is the hourly right here. See how it's like starting to go straight up? Like it's literally almost going straight up, okay? I do it by eye. Other people have different categories for this. I consider this gap, a big gap here and a big gap here, going straight up. Now, other people would measure this and they would say, okay, it's last red day. You have to measure from the last red day up. And if it's up over 100% on a low float or 300% on a small float, you're going to want to consider that parabolic. Um, how do I say that name? Can you unmute Nalin9 for me? She's asking a question. She's asking he or she. I don't really know. Let's see if we can unmute you here. Nally, can you hear me? Your mic's
Yeah,
unmuted. Okay.
hey Dave.
Hey, what's going
It's
on, brother?
Nalani.
Okay, Nalani. Nice to meet you, Nalani.
Yep, nice to meet you.
So I see that you wrote, I'm completely new here. Where do I start? That's actually a really good question. So what you're doing right now is absolutely perfect. You're going to hear a lot of us say a lot of different things, and none of it's going to make sense to you right now. So the best thing for you to do, if you haven't already, you need to go to my YouTube channel, which Dan Bob, if you'll post my YouTube channel, please and thank you. He's our greatest moderator alive. Post that YouTube for me in there. The first thing I want you to do is subscribe to the YouTube channel, please, because we're trying to grow it. And then look at the swing trader. It's the very first thing that will be in my thing. I need you to watch the base and trend breakout videos in there, and then you'll watch the trader view setup. Okay, you can skip the episodic pivot. All right.
Okay.
But right now we're having a meeting, and this is the perfect place to start because this is exactly where a lot of the new guys come and they learn. But we'll get you all set up with that YouTube and a charting platform and everything. So I don't know if you're using a charting platform or not, but we have an awesome charting platform. It's called TraderView. It's this one right here that you're seeing on my screen right now. And we give you all the ways to set it up, and you can use this for absolutely free. If you want like more indicators and stuff like that, you can pay for the essential plan. But if you use my link, you get like $15 off or the first month free. But you don't have to use it. We don't try and sell you on anything here, so don't take it like that. And Dan Bob just posted it in the open chat. So right next to water cooler, if you click that open chat button, you'll see the YouTube video. Click on that and then subscribe to that, and you'll want to watch the swing trading videos in the Swing Trader School. Okay?
Also
Yep,
a
sure.
resource center.
Perfect. So Dan
Also,
Bob, back to your question. I want to make sure that we hit this parabolic up. So Danny actually posted some stuff in there, and I have a lot of reading material to go through on Bitcoin miners and a lot of reading material to go through on what is considered a parabolic. Now, parabolic is discretionary, okay? What I consider parabolic and what somebody else is going to consider parabolic is discretionary. But we can always go back to Kristjan Kullamägi, and he will give us, what parabolic is. If we go to right here to the 3 timeless setups, right here, he actually has the parabolic short, right? So if we go, let's go to the parabolic short here, episodic pivot, parabolic shorts. So these are the setups. A stock is up 50 to 100% in a few days or weeks. If larger cap, 300 to 1,000% if smaller cap. Okay? So if a stock is up between 50 and 100% in a few days or weeks, if it's a larger cap. If it's up 300 to 1,000% if it's a smaller cap. So if we look at NEE right here, we can see that this thing went up 400% in just a few days, right? It went all the way up to 338% from where I pulled it. But it is actually up, I think, the last time I measured it from base to tip, 425%. So this went parabolic. So that's why I changed my rule set here, okay? So that's the best way to look at it, Dan Bob, is we use our strategists, the people that we love to learn from because they've already made hundreds of millions of dollars. So this is his ideal setup for a parabolic short or long, okay? Now, a stock up 50 to 100% in a few days or weeks if larger cap, or 300 to 1,000 if smaller cap. All right? Does that answer your question, Dan Bob?
So is the concern that if it could go up that quick, it could come down?
Brother, I'm so happy you asked because he even posts this here. Think of a stock as a rubber band. If they get really stretched short term, they can have a powerful snapback. This is by far the riskiest setup if done wrong, if you have issues or if you're not obeying stops. most of these short setups, but they're sometimes also good long setups if they don't occur as often. So he likes to imagine these as rubber bands, and you can see this as a rubber band. Once it got stretched and went parabolic, look what happened. It snapped right back down. It snapped right back down and then stopped me out, okay? So this thing could also snap right back down and continue to snap down and close out. So I have chosen to use that 10-day moving average on the hourly. So the 10 hourly moving average is my stop as I stopped out. Sure, I might regret it in the long run, but I much rather have a set of rules to say where I get out rather than this continuing to go down lower. Now, I will say this. I will be happy to get back into this if it shows an hourly trend setup. Let's say it does one of these, okay? Now it's already broken through, but I would want to see an hourly setup on at least a day or two. And right now, I'm not going to play in pre-market. So let's say this thing gets really tight, you know, or maybe it forms like a trend, something like this into the next day. I won't be afraid to play this again, you know, for a continuation. Using that 10 hourly. But that is not what I want to teach here. You know, I want to teach this break right here, because these breaks are the powerful moves, right? Right here. This is what we are trying to study, guys. This structure where it has a big move up and it pulls back and it rides the 10 or the 21-day moving average and it gets tight, and then we have these powerful moves, okay? This other piece that we were just talking about afterwards on the hourly, this is all what you learn after you learn how to catch the meat of the move, okay? So, really appreciate it. Great question, by the way, Dan Bob. Thank you for asking that. Does that straighten everything out for you?
It did. Thank you very much.
Yes, sir. Yep, and we will definitely be talking more about parabolics as they come up. But congratulations to everybody who got a piece of this. Yeah, so I think what we're going to do now is we're going to go into, let me see if I can pull it up. We're going to go into the swing trading school. Does anybody else, before I do though, I want to make sure everybody has a voice. Does anybody else have any more questions about what's going on? Or even if you have a ticker or a trade or something that you want us to go over before we start going into our study. We have a few more minutes before we can, before we need to start studying here. Anything? Anything? I know Swervo, you caught yourself a nice MLGO. That was nice, brother. Did you want to go over that at all? MLGO. Well, it looks good. I like it. All right. Fine. Nobody wants to talk to me. I see how it is. You say, just dance, monkey. Just dance for us, monkey. All right. Let's get into the swing trading school, guys. So these are the swing trading school recaps on the Kristjan Kullamägi. Why do we study these? Well, because this gentleman right here has made millions, over $100 million now and counting. And why do we want to study? Well, because I want to make $100 million. So we're going to continue to study this. So we appreciate the gentleman who created the swing trading school, who's taken all of his videos over the past 3 years or however long he did it, and posted it. You know, he posted it for everybody to learn and watch. So what we like to do is we like to go through here and we would like to look at his trades. So what we do here is we'll read it and then we'll go over it. So Mara up 50%, sold 1/3 in pre-market, 50,000 shares. Think Bitcoin's just getting started, so this could go to $5, $6 or more. So keeping 2/3, even though sitting on double for now, I think this could double from here. So if we zoom in here, this is the daily usually. Kristjan Kullamägi uses the daily on the left and the hourly on the right. So you can see, what did he draw here, guys? Well, we get a big move up here. Look at this, another big move up here. And then it forms this trend. Look at this beautiful trend break. It breaks out in the pre-market and look, boom, he takes this at $1.39. Isn't that kind of funny? We're talking about Mara in 2020 when it was $1.39. Let's take a look at Mara right now and see where we're at. So Mara's at 1926. And, you know, he was playing it back in 2020. He was playing it way back here, guys. Look at this huge run up it had, okay? So let's keep that in mind while we're looking at this. So he takes this trend breakout and then he sells a piece into pre-market, right? Why? Because he's locking in some of his gains. All right, so here's the pre-market and it rips up. You know, he's up 50% on this. He's going to take a piece out. All right, so let's reread that. Mara up 50%, sold 1/3 in pre-market, 50K shares. 50K shares. What a beautiful thing. Now here's Riot. Riot's also a Bitcoin. Riot stopped me out weirdly, but thinking of whole sector gets Momo, will rebuy this on Riot. So you can see here, this is the same trend break strategy. This pushes up higher, and you can see if we look down here on volume, much higher volume than the previous traded. It pulls back, it gets really, really tight. This is the trend break I like to play right here. I would have wanted to get in somewhere here, but it gaps up, right? Well, it stops him out because it takes off as he gets in, and as it pulls back down, it stops him out, okay? So he always uses stop orders. Here it looks on the hourly. As it breaks out higher, it comes back down and stops him out. The best stocks or position stocks, the best stocks are like frauds and stuff. Like half of the Corona names are frauds. IBIO, CODX, INO. If you guys don't understand what IBIO or CODX or INO, that's because they're pump and dump stocks, guys. This is what he's trying to say. Like the best stocks to actually buy are shit stocks. All right? They are, because they get so much hype, and they you know, whoever's putting these fraudulent stocks out, they're trying to make money off of dumb money, right? So if you can be extra cautious and use risk management, you can make a ton of money off the dumb money. You just have to be riding on those giant shoulders, using risk management, watching these trend breakouts, buying the momentum and selling, not holding. Okay, we only play the momentum of the stock and then we sell out. All right, Bob, I'm glad to see you can make it, brother. So I don't know, they're never going to make any money. It's just a pump. I have a legit stock, and then I have pump stocks. LAC is a pump stock. So here is LAC. And you can see he's drawn out this area right here, okay? He's drawn out this area. Look at this trend. You can see these trends on these areas, right? Big move up, pull back, another big move up. It pulls back, but it holds new higher lows. It creates a trend and a breakout. Now look, it creates a base here and a breakout. And he puts all these annotations on here, right? It's beautiful. You know, it's beautiful. And now if we look at the hourly, you can see on this same setup, he's drawn right here. You can see the base breakout that he plays. This is really nice, guys. So this is a trend right here, a trend breakout. And then you also have a base breakout. I really like these. Now this makes a new higher lows, 3 new higher lows, and it creates this base right here. And it gets really, really tight on this. Now keep in mind that's the hourly here. So if we look at it over here, see how tight that gets on the daily before it breaks out? That's absolutely beautiful, guys. That's what you want to see. You want to see things get really, really tight before they break out, okay? And that's exactly what happened here, and it did it on volume as well, all right? So he played this, and he says that he knows that this is a pump and dump stock. So he's not buying this and trying to hold on to this thing forever, guys. He's buying this to sell it after it loses its momentum. Jumia, JMIA, is a pump stock, but it doesn't matter. Many times these are the best ones. These things are mostly retail driven. They are no big institution buying this. Let me reread that, guys. He knows that JMIA is a pump stock. It doesn't matter, he says. Many times the best ones, many times these are the best ones. These things are mostly retail driven. Mostly retail driven. That means people like you and I are buying these shit stocks. Okay? There are no big institutions buying these. These are the small cap stocks that just start ripping because people get way too excited over these shit stocks and they believe in the names. Awesome Art says, like GME. Yes, absolutely. Now, I do think that institutional ownership has a hand in it. I believe institutional ownership was shorting too much. That's why they got squeezed out. But I think right now, from what we see, it's just retail trading getting sold into. So everybody in the retail started buying into this, and if institutional wasn't already holding, they're getting sold into. All right? So keep that in mind too. I think GME is a totally different beast, actually. But yes, you could use that as an example. So Jumia, it pumps up. You know, he's taking this this breakout here from what it looks like to me. Let's look at the hourly here. Let me take a look. So this is a 16.5% ADR, very fast mover with a market cap of 967 million. Okay, and you can see this thing really got to ripping to the north side. All right. I don't see where it says he actually took this, but if I had to guess, it was right here on this day where he doesn't actually have anything written. But you can see it makes a big move up, a pullback, and it gets tighter, making new higher lows. And then when it breaks this trend, boom, it takes off. Okay, absolutely beautiful. He may have taken it at this white line. I'm not 100% sure, but you can see this thing just continues to go higher. This thing doubled, right? Or close to doubled from where he bought it, close to double from where this white line is. You can also see over here on the hourly, you can see that we have this big move up. It trades sideways. It creates this trend right here. It breaks out. That's that same line right here that you guys can see. And then it just continues to head to the north side. This is what we're training our eyes, guys. This is exactly why we are training our eyes. To see stocks like this. This is what we want to see. This is how we find the NNEs. This is how we find the JMIAs. Okay? So you can double whatever amount of money you put into them. So we can choose the best of the best stocks and get that money. Then it says, then you have stocks like TDOC, TDOC. Okay? He doesn't go on to really talking about TDOC, at least in these notes here. But you see, you got this nice push up. You know, I think what he's saying is like this is a real stock, right? And the first thing that makes me think this is a real stock is it's not a penny stock, right? It's up in the 180s right here. That'll tell you right there that, you know, it's been around. It's not, you know, a pump and dump. It's not trying to get a bunch of retail traders in to buy this thing. Right here's the trend. This is the buy area. It looks absolutely beautiful. And then it takes off and it pulls back. It retests that buy area and it takes back off, okay? Now, if we look at the hourly, you can see the trend a little bit better over here. I'll zoom in for you guys if I can. There we go. So you can see here's the ascending trend coming up and the descending trend coming down. And you can see where the breakout area is. You can see this white line does look like where he bought. And that's absolutely beautiful. So it's very, very nice to see that. So it looks like he took, it looks like he took this area, not this area. This area does look good too. But we got to keep in mind too, the big push ups on volume. Here's your volume, big push up, and then it pulls back, and then it's the trend break right there. So that's a very nice trade as well. AVLR. Actually, before we go on, do we have any more questions, guys? I don't want to just run through this. You guys have any questions? I'm going to take a sip of coffee. I'll let you think on it. That is some good coffee. Iced her down today, boys. Got warm towards the end of the day. I don't know about you guys, but the weather here was rainy, and it made it humid afterwards, so I went swimming, and I knew I had 2 meetings after this, so I had to throw some ice in the coffee today, guys. Ice in the coffee.
Counting the humidity today, it was 120 degrees here.
Oh my gosh, Dan Bob, are you melting? Are you at least in AC?
I'm an AC, dude.
Attaboy. Hopefully the wife's not still out camping.
Yeah, she's back home, but
Good.
they're up the mountains. It's cool up there.
That's good. All right, let's go. I want to go through. Here's Trade Desk, TTD. You can see some high tight flags here. This is looking nice. See this base breakout? You get this V-shaped bottom, and then it makes new higher lows, and then there's a base right here for a breakout. That's very nice. You can also see this trend type breakout. Kristjan draws these a little different. See how he's cutting through all this noise that's up top here? I like to draw these from here, this peak, all the way down through the tops of these peaks, and then my base would have been basically where his buy-in area is, you know? So again, guys, when you're looking at these trend lines, you need to understand that it is discretional. It's whatever you feel comfortable with. Okay. Datadog, DDOG, you can see here too. This is another one of those bases right here that broke out higher. It did not pull back. It held this area. And then you have a trend break here as well. This one is not the cleanest setup on the daily, but it is a setup and it does look nice. It looks like he actually took this somewhere in this area, which I don't understand why he took it in this area completely. Maybe it was because of this mark right here. If you guys look, these are called shakeout days, where it breaks a trend line. It'll shake people out, and then it continues higher. Okay, and then maybe because it got above the daily anchored VWAP, that's why he bought. But hey, he's not giving away all of his secrets. But it's nice to see base and trend breakouts. They work. All right. So he says, W, Wayfair, these are the fund-driven, institutional-driven stocks, meaning the big buyers are here to play, right? And you can see on the daily here, this is a trend breakout right here. You can see it starts to get tighter, has 3 inside days, then breaks out above it. This would have been a clean buy right here. And then look, it comes back and retests this area and takes back off on volume and forms another base above this area. Another clean break of that base, I'm guessing, on volume. And here's your volume. And sure enough, we take off higher. Okay, goes up $42. Nope, $40. Goes up $40 in like 4 days, guys. You know, if that doesn't get you excited, I don't know what the hell will, to be quite honest. And we'll go over one more, and then we're going to have a little chit chat. So look at Baba, guys. He likes to talk about this Baba here. He likes this this big move up, you know, and it forms this big trend over 1, 2, 3, 4, 5 months, and then it breaks out, right? It breaks out on volume right here. See that volume in June? Boom, breaks out in volume. That's a nice trade right there. Okay, and then you're holding on to this until it breaks usually the 10-day moving average or the 21, depending on what it was following. This one looks like it was following the 10-day, its last run. Down here, it's just kind of running through spaghetti. So I would use the 10-day, stopped out here. But look at this. Look at this next on the daily. Beautiful trend here. Beautiful high, tight flag. This is what he would want to watch. This is what I would want to watch. See, it even says right here, Chinese names are really strong. They are flagging Baba. This is a huge flag here, okay? This is just kind of what he's watching. It's not clean. Don't get me wrong. This is not clean. This is what he's looking at, and this is what it looks like on the hourly. These are the trades that I like. If you drew a trend line from here to here, guys, this from the top of this peak down through this peak, you would see the break at 152, 153 area. That would be where you'd want to buy as long as this volume came in. You can see right down here, this is volume dry up. This is where big volume comes in on the push up, and then there's volume drying up on any of the selling off, right? That means there's more supply than there is demand. If nobody's selling it, but more people want to buy it, that means the supply is higher than the demand. And what happens when you have more supply than you do demand? Well, that means prices go up. That is economics 101, guys. If you get to understand that, you can make millions in this market. Okay? So I think that's all I got for studying today. I think we went through plenty of charts. If you guys don't have any questions on this, you can find this in our resource page. If you guys don't know where that's at, I'll show you really quick. So you're going to scroll down on this. You're going to click on the resource page, and you can see, guys, we have plenty of stuff. Here's the trading view for the new gentleman, Nalian. Oh, man, I'm so bad at that. How do you pronounce your name again? Nalani? Nalani. Yeah, I bet it's Nalani. I bet I got that right. Nalani, what I want you to do is download this.
Yeah, that's right.
Did I get it right? All right. All right. I'll do my best to remember for next time, Nalani. Thank you so much for joining us tonight, brother. We appreciate you. But in our resource section, if you look right here in our resource section, you're going to see this is the trading view. This is my affiliate link. If you click on the affiliate link, you can go right to this and you can get it downloaded for free. And then, of course, what you'll want to do is you'll want to go back into Trader View. You'll want to scroll up here, and you'll see we have is it not in here? No, it's not. What I want you to do is go to my YouTube. So let's go to YouTube. We'll type in David Worrell, and you'll see right here. You click on that ugly face. Right here's the trading school, Nalani. You'll see this trading school, and you'll see right here, this is the trend break strategy, the base break strategy, and then right here is how to master your swing trading, your trend following chart setup. So if you click on this video is going to pop up.
If you make,
and it's going to, well, we have to get through this stupid ad, but this video will pop up, and our boy Covey made this for us. It's absolutely amazing. He goes from the very start on how you are actually going to set this up from the very opening, right when you open this up. It's absolutely perfect, okay? So make sure you go through all that. And if you guys haven't done that already, make sure you do that because it's very important that you guys have this. So that way you can look at the RS rating. We'll be always talking about the RS rating. We'll always be talking about the average daily range up here at the top right. We'll always be talking about stocks. And then, of course, every weekend, we send you a stock with 300 of the most relative strong stocks in the market, and we go through these stocks. I literally go through each and every one of them like this, and I try to find the trends, okay? Like, oh, look at this. Oh, this ACIU. This is a 94% rating, and the ADR is 7.32%. Well, I like this. I like this trend right here. So what I'll do is I'll go ahead and take my trend line. I'll mark this out, and you can even set alerts by clicking right, and then you can add an alert. So now when this gets above this trend break area, and if it does it on volume, if we see volume coming in on the 5-minute, that's where I will take my trade, okay? So that's just a little bit of a way we do this, and that's a great way to get you started. So do you guys have any questions for me? I know I rambled on a little bit too much about the the trader view, but I think it's important. Any questions, guys? Is there anything that you want to go over? I got about 5 minutes. If you guys have any tickers you want to go over. Actually, MRUS is setting up. Danny actually pointed this out today. Check this big breakout on volume, guys, and then it pulls back. Now what's it forming? You flippin' guessed it. A trend break, riding this 10-day moving average. If this gets above 57.94, it has an average daily range of 5.5%. And if we look at FMRUS on this, you can see as well, we are at a 98 relative strength rating in this market. So MRUS is definitely on my watch list, guys. It's definitely on my watch list. It definitely needs to be on yours. We are looking for 5-minute volume to come in to break through this $58 area. And if it doesn't on volume, I will be in this. CAMT, I can't play this anymore just because I was already in it. And it's already broken the trend and it stopped me out. So we made $53 on this trade. I'm not looking back. Of course, I'm still watching Tesla. My only issue with Tesla is I feel like I'm missing this trade. I feel like every time we get a breakout on Tesla, it always pulls back. I feel like the trade was this washout day that I called out. Big, nice liquidity washout day. I think Swervo was here for that, actually. Swervo, I think we met each other on 6/11 when Tesla had their beautiful washout day. And I was like, man, I should have grabbed some shares down here. It's just very hard to do so. Very hard to do that. And now we had a trend break, and now we have another trend break. So it's hard for me to get into Tesla, but I'm telling you, there's accumulation going on in Tesla. So if you're looking for a longer term position trade where you're going to buy and hold this thing for 2 or 3 years, this might be the way to go. BTDR, I'm pretty sure Awesome Art took this trade. Congrats to you because this was a beautiful trade. I seen it popping off, but I was trying to get in on the bid, but the bid was too rangy. And all these flashbacks came in from yesterday because Dan Dan, the greatest moderator alive, actually brought up the spread. I'm sorry, I keep saying range, but the spread or the range between the bid and the ask was too wide. It was like 20 or 30 cents when I was trying to get into it. So when I clicked buy bid, it was like down here at 961 where it was trading at like 971. and I did not like it. Maybe it was a little higher than that. I can't really remember, guys, but this thing just kept taking off. It never came back in. It never got me, and I wasn't going to just keep fighting that. I wasn't going to buy market and then it pulled back on me. Even though with a 10.5 ADR, I had plenty of room to do it because if I was going to stop low of day, I could have bought all the way up to the, the break of this 996 area, and this is where Danny was actually looking to get in as well. So awesome buy on that. We also have LSF, which already broke that trend line. Look at, train your eyes, guys. Right here it is. There's the trend break. There's the volume. If you're not in it, it's because you passed on it, and I'm glad some of you got in it. GEV, actually, I have to reset my alert right here. We had a base breakout today on GEV. I was going to consider this the base breakout at 180.36, which really, it really was. It really was the base breakout. It's making these new higher lows. I can't get into it now, but if we see a massive amount of volume come in on this, on GEV, I'll take it. Okay, so I do like GEV as a base breakout. Let's see how VLN did. Look at another tight day. If VLN decides to break out of this area at 312, watch out. I think we can really head to the north side. It's getting very tight here, guys, and it's a 4.6% average daily range, and I'm pretty sure it's got high RS as well. SMMT, I'm starting to not like SMT. It's starting to barcode here. It's starting to trade sideways. I don't care for it. It's still tight. It still had these inside days, but every time it gets up to here, it's just selling off. There's a big seller here, and until the seller gets knocked out, then it will head higher. So my alert's still set at 850. If it can clear 850, let's rip tater chip. And you will look at that. The only stock that I lost in the past 7 days is now back right up past where I bought it. That's part of trading sometimes, guys, but that's why we have our stop losses, because this thing could have continued lower. There's plenty of other stocks that I could bring up on this watch list, but that's my main ones. Those are the ones I'm going to continue to watch. And in the morning, I'm going to have time set aside so that way I can continue watching more and more of those stocks. So does anybody have any more questions or comments or concerns? This was a great meeting tonight, in my opinion, but I do want to make sure that you guys get a chance to talk. And Michael, I've also unmuted you just in case you wanted to say something. We just wanted to keep you clear in case any of that rumble came over the recording. Predator?
What was your break on SMMT?
SMMC, 850.
Yeah,
Yeah, gotcha.
850.
Yeah,
Yeah, sure.
850.
SMMT is just like Next.
Is it?
Yeah, take a look at it.
Let's take a look. No, I wouldn't say it's anything like Next, where this has a big move up, a pullback, and then trade sideways. NEXT keeps bumping its head on this area at 801, where this is a base, and SMMT is a base, but it's got this big move up and a pullback, and then it trades sideways. You see? So if you're talking about like the pattern at the top, yes, it's a base breakout. It is a base breakout. But for this next to look like SMMT, it would pull back down here and it would be trading down here. Do you like NEXT, Predator? Oh, now we're not talking.
No, I wasn't crazy about it, but I was just comparing the way he's bumping his head at $8, and
Yeah.
SMMT seems to be bumping his head at $8.50.
Oh, see, I wasn't even like looking at the actual price, the dollar issue. I'm actually looking at the structure of it. But yeah, no, that makes sense. See, NEXT has a lot of this overhead resistance. You see that if you zoom out. And SMMT, this is got a little bit of resistance here, but not as much. This is what I like about SMMT. If it breaks out of this area, it really doesn't have much overhead resistance. Its majority of its overhead resistance is at this 950. So if it can get up and through this 850, then it's going to get through this 950, and then we're off to the races. But I think it can be powerful, but it's not doing anything. All it's doing is juking people out. So I don't really care for it, but I'm telling you, if volume comes in on this thing and it exhausts those sellers, this thing can really head to the north side. So, all right, guys. Anything else?
Hey, Dave, I got a question.
What's up, B. Stewie?
Yeah, I was just wondering if you've looked at FSLR lately, and do you think that it's forming a head and shoulder, or I know it needs more time, but
Sure.
could be forming a head and
All right. So when I pull up FSLR, the first thing that I see, if you want to look for a head and shoulder, you have to understand that this would be the shoulder, this would be the head, and the next shoulder would have to be right here in the 286 area. So it would have to come back up into 286 to form a head and shoulder pattern. Right now, that's not
Thank you for
showing.
clarifying.
Yeah, you're welcome.
I
Yeah, the shoulders are usually within a couple of dollars or a couple of pennies. And so this is like a head and shoulders with a limp. You know what I mean? Like this is me walking right now. But no, head and shoulders. The shoulders have to be within the same range. So within that 287 area. So this is not a head and shoulders pattern. I can see it's trying to hold this 21-day moving average, but guys, I don't have a trade on this. I don't see a proper base or a proper trend breakout on this. This was the trend breakout. We played it, and I didn't exit any of my shares, so I ended up stopping out for break even on this trade. So now we're just kind of sitting back and waiting to see what FSLR has to do. But I'm glad you brought it up because it's way up here on my watch list, and I haven't really been looking at it. So I should probably look at ANF as well. Yeah, it's forming a trend, but it's hard for me to get into this thing after it broke that 10-day. Made a lot of money.
if you draw your trend, draw your trend line like Kullamägi on FSLR, wouldn't you say that would be a trend going through going
like
from the left shoulder down?
Yeah, if he took it like this.
Right.
Yeah, I guess you could do that. That's just not how I do it, And if that's how you want to try and trade it, you can do that too. I'm not going to argue with anything like that.
No, I mean,
what's up?
No, I'm just asking, could you play it like that?
Hey, man, I'm going to tell you this. This is really important. Really, really important. Everybody is going to, this is discretional. This trading is not done by an algorithm. I'm not going to say A plus B equals C. This is, I drew my trend line here, or I drew this squiggly line, or I put a rocket emoji on this, and so that's why it's going to go up. Whatever works for you, and I'm a firm believer of that. That's why I use the 10, 21, 30, 50, and 200-day moving averages. Does that mean you can't use the 9, the 17, the 32, and the 51? No. You can use whatever you want when it comes to your indicators. And when you're drawing a trend line like this, B. Stewie, and you want to say, I think this is all just noise. This huge run up and this huge pullback is just noise. And this should be the true pullback. Then you can do that because this is psychology. This is human behavior right here. All of this is. Every transaction you see here, there's somebody behind a computer or a cell phone that is buying and selling these trades. So if you think the human behavior got a little out of hand and none of this actually means anything to the stock, I could totally see you arguing that and you drawing this trend line. And you know what? Just because you said that, I'm going to go ahead and mark my alert right here. So that way we can review this. When it breaks out here and you say, hey, I had an inclination, I can say, you know what? You were correct. Because it might do that. And you know what? We might learn something from this, B. Stewie. So I like that. I like that. And there's a really good question too, because now you're making me think outside the box because I don't want to get stuck to just one thing. Although I'm only going to trade the way I trade. I'm not going to take this trade, obviously. But if I see this set up more and over again, that's when I'm going to start diving a little bit deeper and figuring out, hey, you know what? I'm going to start taking this B. Stewie setup. You know what I mean? So I appreciate you asking that. It was a great question, dude. For sure.
Thanks, man. Appreciate it.
Yeah, thank you. Any other questions, guys? Come on.
So everything I've ever read about trend lines, the only really kind of rule I've ever read is that it needs to touch 3 candles. Other than that,
to form a trend line. Yeah, absolutely.
Yeah.
So anytime I'm forming a trend line on the best setups, I always want to see it holding a moving average like a 21-day. So this is MRUS, and I'm going to show you why I'm MRUS. When I play a trend break, I want to see high volume and then a volume dry up. So here's the high volume, here's the volume dry up. Oops. Oh boy. Here's the high volume. Here's the volume dry up. Okay. I'm sorry. Here's the high volume. Here's the volume dry up. You can almost draw a trend line on this volume dry up right here. Look at this. This volume's drying up, right? And here's this yellow line is your average volume, right? On this, you can see a huge push up and a pull back, and it follows this 21-day moving average right here. And then every time it comes up to the trend, it bounces, it bounces, it bounces. I'd like to see this get a little tighter. Of course, this might head higher tomorrow, but I'd like to see 2 or 3 more days. That's what I was telling Danny. I would like to see 2 or 3 more days on MRUS before it breaks out higher, but this is definitely on my high watch list. This is the trend breaks I'm looking for. Now, why am I bringing up MRUS as an example? Well, because in January and February, MRUS made me a ton of money, okay? So if we look back here, you can see I have a bunch of drawings, a bunch of annotations. Look at this trend break. Big move up on volume, big pullback, and it's following that 10-day. This looks exactly what I just showed you on this chart. Look at this, same, it's literally the same thing, only it's wider, right? So this is the same trade, the same setup, just back here in January. See that? Big push up, pullback, starts riding the 10-day moving average, gets tight, breaks up higher. Look at it, forms another trend. Boom, another trend, holding the 10-day. Boom, it pushes higher. Look at this, another trend. I even added another 100 shares onto this. Boom, it pushes up and it holds that 10-day moving average all the way to here. And when it breaks this area, I exit out. I made a ton of money playing MRUS before. Now look, it forms another trend, but it's not holding any of the previous moving averages. I don't play it, and look what happens. It starts to fail lower, okay? So now we've given the time, the majority of the time. Now I'm not holding this at all. I'm not holding on to this. I'm using that money elsewhere. Now it has another big push up and forms another trend, getting tighter on the 10-day moving average, which I still think it needs more time, but I think this thing can rip, tater, chip to the north side. So I think it just needs some more time, and we will be back in MRUS. So yes, trend lines can be drawn all different types of way, but I like to draw them when they're on the tops of things and after they have formed a big push up on volume and then a pullback, right? Big push up here, here, not so much here, but some. But this one, not so much. It just kind of grinded higher and then pulled back, right? So this trend line looks like it still needs time to breathe, and it did. So I like the big push-ups, the pullbacks, following a moving average, gets tight, and then breaks out. All right.
Thank you very much, David.
No, I appreciate you, Dan Bob. Yeah, I agree with you. You need at least 3 points of contact at all times. You know, and B Stewie, you know what that is. When you're climbing a ladder, you need 3 points of contact when you're climbing to be safe, right? You need 3 points of contact on that trend line to be safe as well. So I appreciate you bringing that up, Dan Bob. Any other questions, guys? No? Well, let me say my goodbyes. I appreciate each and every one of you guys being here. Let's see. Nalani, if you want to stay after, if you have any questions, you're more than welcome to stay after. I'll be on here while I upload this video to YouTube. Appreciate everybody being here, though. You guys are absolutely awesome. Appreciate you letting me talk to you, because I know you guys are here to learn, but the more that I preach this stuff, the better off I am. I'm studying too. I'm just doing it with you guys. So this means a lot to me too, that I actually have a community to do this with. Because trading can be very, very lonely, guys. Trading can be very, very lonely, and it can be very disheartening because you're lost, right? Well, I promise you this. If you stick with me, you're going to have a sense of direction. You will always have a family here, a community here, because I sure as hell ain't going nowhere. And I know there's quite a few of you OGs that have been here with me that aren't going anywhere either, because you see the process, you see that it works, and you see how extremely powerful this can be. I'm getting goosebumps now. But thank you guys so much for being here with me, and I hope you have an awesome night.
Thanks, David.
Thank you, sir.
Good night, everybody. Thanks. A good meeting.
Hey, you
Yeah,
too,
good
Jimmy.
night.
Hey, congrats on your N&E, bro.
Thanks.
Hey, Predator.
That's
I had a
Predator,
question.
isn't it?